Today in this video, I've brought you this magical indicator that combines the three best price action indicators and shows you the best possibility of winning your trades. And combined with the strategy that I'm going to show you later in this video, this indicator works out very well and you'll be able to take higher risk to ratio trades by following this strategy. So without any further ado, let's get started. But before we do that, please make sure to subscribe to my channel, as this channel is currently new and I'm trying to post consistently, bringing you new indicators and strategies every week. So first of all, let's go ahead and apply the indicator that we're going to need for this strategy, and let's go towards the indicator tab, and here we're going to search for TDI GM, and we're going to add this one by one manual to the chart. Now once we click on this indicator, you can see that this indicator is looking pretty complex, but it's pretty simple and it works very well by combining three indicators that I'm going to show you now. So inside this indicator, if I zoom in a little bit, we can see that there are a lot of oscillators and a lot of lines, and this indicator combines three indicators. The first one is the Bollinger Bands, the second one are the exponential moving averages, and the third one is the RSI line. So for example, here we can see that this red line here is the RSI line, and this shows us the price action wherever the market is in overbought or oversold conditions. These two lines are the upper and lower band of the Bollinger Band, and this one here is the middle line of the Bollinger Band, and this here green is the slow period moving average, and the red line is also a fast period moving average. So we'll use this crossover as our signal for taking entries of long and short positions. So now you know about the lines of this indicator. Let's go ahead and change the settings of this indicator so that we can use it for our price actions. So let me just go towards the indicator setting, and here I'm gonna go ahead towards the input and change this RSI period from 11 to 13, and also I'm going to change this band length from 31 to 37, and here I'm going to change this fast MA to 2 and the slow MA to 7. Now once these settings are done, I'm going to hit OK, and there are multiple ways we can use this indicator for taking long and short positions. First of all, we can use the fast period EMA and the middle line of this Bollinger Band to take the entry. For example, if I just go here to the setting and hide everything else and only keep the middle band and the fast period EMA, then we'll see that we can use this crossover for taking long or short position. For example, whenever this fast EMA crosses above this Bollinger Band middle line, then it's a signal that market is in the bullish trend. For example, here you can see the crossover happens and the market moves in the upward direction, but there are a lot of false signals as well. So we'll see how we can avoid those false signals later in the strategy. For example, here as well we can see that the crossover is happening and we can open a long position at the close of this candle here, and we can target 1-to-1 risk to ratio, which gets easily met. And once our 1-to-1 risk to ratio is met, we'll close 50% our trade and then set a second take profit level at 2 risk to ratio, doubling our profit. And we'll also move the stop loss level to our entry point to break even the trade, so that will be saved from the stop loss. So similarly, if we look here, we can see that the crossover is happening in the downward direction, and after the crossover we can see the trend moving in the downward direction. So we can go ahead and take a short position at the close of this candle here, and we'll be putting a stop loss above here. And first of all, we'll be targeting 1 risk to ratio, which gets easily met, and then after this happens, we can go ahead and set our take profit to 2 risk to ratio, which we see that did not met, but we will have break even the trade, so we will still be saved from the stop loss, and we have the 1 risk to ratio with our 50% of the trade closed. So this is how you can use this fast period EMA and the middle line of the Bollinger Band for taking long and short entries. The second strategy that you can use with this indicator is if we turn off everything else and only keep the upper and lower band and the RSI or the fast EMA, and then so we can see whenever this fast MA crosses above this Bollinger Band, that means that price is in overbought condition, and whenever this crosses below this EMA, that means that the market is in oversold condition. So we can use these as our signal for taking long and short position. For example, here we can see that whenever the price action is happening in such a way that fast MA is crossing above this low MA, so the market is overbought and the market is looking for going downward. So we can see as soon as the crossover happens, we are going to take a short position. So for example, here we can see the crossover is happening here, and we can go ahead and take a short position at the close of this candle here. and we can put our stop loss above the string high, and again we will be targeting 2 restore ratio, and then we can close 1% of our trade at, and we can close half of our trade at 1 restore ratio, and then we'll be extending our take profit to 2 by maximizing our profits. So this is the second strategy that you can use, and similarly you can use this whenever the fast MA crosses below this lower Bollinger Band. We can go ahead and take a long position, as you can see here, which is happening here, and we can put our entry at the close of this candle, put our stop loss below this last swing low, and then target 1-to-1 restore ratio. So let me just go ahead and take this trade as well and show you by example. So for example, this is happening here, and we can go ahead and take our short position at the close of long position at the close of this candle, and then we'll be setting our stop loss at this level here, and initially we'll be targeting 1 restore ratio. But the problem with these strategies is that there are a lot of false signals as well. For example, if we look here, we can see that this is a false signal because market just goes downward after this fast MA crosses above this upper Bollinger Band. So now let me just show you how we can filter out these false signals and how we can use these strategy and improve this strategy. So for that, we're gonna need 2 more indicators, and those 2 indicators are the EMA or exponential moving average, and we're gonna search for it and apply it to the chart. And the second indicator is the triple EMA that is also made by TradingView, and we're gonna apply this to the chart as well. So now let me just go ahead and change the settings of these indicators, and inside the settings we're gonna increase the length from 9 to 200, and also change the EMA color from this blue to white, and also increase the line thickness so that we'll be able to see it a little bit better. And now let's go towards the settings of triple EMA indicator, and inside the input we're also going to increase its length from 9 to 200 and change its style so that we'll be changing its color to yellow and also increasing its line thickness. So now let's go ahead and talk about how you can take long and short positions using this strategy. For taking long positions, following conditions must be met. First of all, the price action must pull back into this area between the triple exponential moving average and the normal exponential 200 period EMA. And as you can see here, the triple exponential moving average should also be above this low EMA. This means that market is shifting towards the bullish momentum. And the second condition that we have to check is that this fast EMA should cross below this lower band of the Bollinger Band, which we can see happening here. And once this happens, we are waiting for the first candle that crosses above this triple exponential moving average, and once that happens here, we can see that this candle closes above this triple exponential moving average, and still at the fast MA is below this upper band, because if it had crossed above this upper band, we would not take this position because market would already be in the overbought condition. So for now, our entry is safe, and we can go ahead and take a long position at the close of this candle here, which crosses above this triple exponential moving average. So let me just go ahead and enter a long position at the close of this candle, and we'll be putting our stop loss below this last swing low. And for the first part of our trade, we'll be targeting 1 restore ratio, and once this 1 restore ratio is met, we'll close 50% of our trade. As you can see here, we'll close 50% of trade here, and we'll be setting our take profit level to 2. So here our 2 take profit level has been set, and we'll also move our stop loss to our entry to break even the trade, and let's see how this plays out. So as you can see, our both take profits has been hit, and in the second part of our trade we were able to take double to what we risked. So this is the beauty of this strategy, and this also shows you the risk management of this strategy. Now let me just show you how you can take short positions using this strategy. First of all, the price action must pull back into this triple exponential moving average, and this triple exponential moving average should be below this slow period EMA, and also this fast MA line should cross above this upper band of the Bollinger Band, which we can see happening here. And once this happens, we will wait for the market to close below this triple exponential moving average, so which happens on this candle, and we can go ahead and put our entry at the close of this candle if the fast MA is still above this upper Bollinger Band or above this within this area as well. The only thing that we need to pay attention to is should not cross below this lower Bollinger Band, which would mean that the market is already in the oversold condition. Now once these conditions are met, we can go ahead and take our entry at the close of this candle here, and we'll be putting our stop loss here. And first part of our trade will be targeting 1 restore ratio, which we can see easily gets met here. Once this happens, we'll set our take profit, which we can see easily gets met here. So once this happens, we'll increase our risk reward ratio to 2, and then now we'll also move our break even to this entry point, so that will be saved from stop loss. So in this area here, even you can see the market reversed, but we were saved from the stop loss because we were able to break even our trade after 1 risk reward ratio. And if it had played in the direction that we wanted, we would have got the double of what we had risked. So as you can see, this is how you take the short position using this strategy. I hope you like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you in the next video.